Let's get on board then Jamal Mechlai, and he joins us on our Mumbai phone line. Jamal, hi, a day of policy, and we have seen or heard statements coming in from the governor, and even after that, the kind of decline that we have seen on rupee, 1% down now.
Well, I would say in this day and age, moving between 59.20 and 59.70 is not really a decline, right? I mean, what we have seen is rupee moving between 55 and 60. I mean, that's a decline. All right. So I'm saying, see, clearly what they've done is they have tightened their grip on the market. There's continuous talk that they plan to, again, further increase margins in the currency futures market, et cetera, et cetera. I don't think any of these measures are particularly sensible. But the reality is it is clear that they want to prevent the rupee from falling below 60. Right? And they are successful. I mean, unfortunately, there's a lot of collateral damage, right? Which is bond prices, potential borrowing costs, et cetera, et cetera. And, I mean, the die is cast, though. I mean, they've defined a certain task and they are working to achieve it. The problem will be, I mean, obviously they're not going to do this forever, right?
Sure.
When are they going to unwind? And what happens when they unwind? Because part of what is implied by this pressure is that they believe that if they didn't put this pressure, the rupee would collapse. Right?
Well,
That's the problem, in my view.
Well, absolutely. Your point is well taken, Mr. Mechlai. But what really happens ahead of the FOMC now? Because that's another trigger, a bigger pressure coming in for the market.
Well, it is, but I mean, when the liquidity it would be, let's put it that way. But when the liquidity has been squeezed so much, there's no room for the market to move. So even if the FOMC says, okay, we're going to start cutting back our purchases, what's going to happen? Theoretically, what should happen is that more money should leave India to go back. But I don't see that really happening. I think all the debt money that was to go out was the unhedged money. Right? Money that came into debt that was hedged and that blocked arbitrage of 1% or 2%, that is not going to go out. Right? So, I mean, I think all the unhedged debt money has gone out. Equity money in general, I mean, really, everybody is waiting for what's happening with the government and politics. My sense is I don't think FOMC is going to create too much pressure in this sort of situation.
Mr. Mechlai, yes. Mr. Mechlai, just to talk numbers with you now, after all those RBI steps that we saw coming in, we did see rupee go all the way back to 58.70. We are back at 60 now, even as those measures are still working into the market. What more steps would you expect from the regulator now?
See, I don't think the rupee is at 59.80 right now. I think it's stable by their reckoning. So I don't think they're going to do anything more. If some more pressure comes up, maybe they will put the final nail in the coffin of the futures market. But I don't think that will have that much impact. I think most of the speculation has been squeezed out already. So I'm saying right now we just got to really see what the FOMC comes up, see what the Fed starts doing, but far more important, see what happens in the economy on the ground. That's what we need. See, if you're going to choke somebody for a while, okay, you can do it for a while, but then other things should happen, no? But, I mean, that's really what we need to see. Now, if you start seeing some significant positive movements in the local economy, then maybe they will be able to let go of the choke without creating too much trouble. But it's a big trick.
Well, absolutely, Mr. Mechlai. We'll let you go at that. Thank you so much for joining us. So there are those lots of ifs and buts and, of course, a lot of uncertainty and unclarity as well coming in from the Indian and the international markets.